Thank you, Mark. Good morning, everyone. So I'm Michela Bragagnolo. I'm a data scientist at the European Central Bank, and I have more than 5 years of experience in this field, both in the private and the public banking sector. This morning, as Mark mentioned, I'm here with my colleague Tal, so I give him the word so he can introduce himself.
Hello, everyone. So I'm Tal Strauss. I'm a financial management analyst at the European Central Bank here in Frankfurt, currently pursuing a PhD in finance, and my expertise include budget planning through predictive modeling and also optimizing financial decision making. So I'm happy to be here, also discuss with you a little bit later and present this piece of work with Michela.
Our goal for today is to give you an overview on how we deal with the divisional budget consumption and how we use advanced financial forecasting to analyze budget and cloud costs. So first, I want to give you an introduction of what do we do at the European Central Bank. Maybe if we can go to the next slide. Yeah. We are the central bank for the euro area, and we are responsible to ensure the price stability, to contribute the safety of the financial system, as well as to supervise the banking system through the single supervisory mechanism. Now let's dig into our topic. So being a public institution, the attention to the budget is one of our top priorities. And for these reasons, we try to combine as many data sources as possible. As we can see in the next slide, among these data sources that we try to combine, we have, for example, contracts data, who are providing these contracts. So what kind of vendors we have, what kind of services we provide and we use in the bank, as well as what kind of projects we have in our portfolio, and of course, what's the budget consumption related to all of them. Once we analyze the data and get insights, those insights are then visualized in interactive dashboards as well as reports, and this in order to support senior management decision-making process. Now, what are the most common questions that we are trying to answer with the data? For example, what are the most expensive contracts, or what are the most expensive projects? Who is responsible for them? Who owns them? Are they concentrated in some business areas in the bank, or do we have a higher exposure with a limited set of vendors? And are they related to a particular field? So do we spend, for example, more in the consultancy field or with leasing or IT equipment? Those are all important topics that we are trying to explain through the data. Now, let's see what are the challenges that we face, of course, integrating those huge amount of data. As I mentioned, we try to combine different kinds of data that are coming from multiple systems. And most of the time, they are not standardized. They don't have the same structure. So it's hard to combine them. On top of this, we need to include manual reports, which of course are prone to human errors. And sometimes we also lack complete information because some of these reports are subject to personal interpretation. And this could lead to misunderstanding and non-standardization in these reports. What we tried to put in place to mitigate those challenges are some automatic controls. We have a first level of automatic data checks, which are used to validate the inputs that we receive. And the second level, which control cross-checking the data if we get the same information from the different sources or if we have inconsistencies among them. On top of these automatic controls, we also need manual oversight because, of course, technology in this case can help until a certain point, but we need to be sure that the data is accurate and reliable. So sometimes we still need a subject matter expert to validate the data and verify they are correct. And now we'll give the word to Tal, which will present one more technical approach, which can be used to analyze budget data.
Thank you very much, Michela, and thanks everybody for attending. So in straight line to what Michela has mentioned, we thought it would be very interesting for the people here in the room to hear a little bit about the real challenges we face here at the ECB. So the story goes and circles around budget stabilization, which this is something I guess we all are familiar with. ECB is being very cost conscious, trying to stabilize its expenses, the financial expenses, internal financial expenses. By that I mean the service and IT expenses, and on top of it, the ECB is performing a move to cloud, to some of its IT systems, of course, like other institutions globally. And so those two phenomena, if you will, creates pressure, financial pressure, budgetary pressure on the ECB, on the managerial level, to have better insights, to react quite quickly to changes and to budgetary expenses. And now, just to give you a little bit of the proportions and the background, to the extent that I can, publicly available information is out there that the ECB in 2023 has reported a loss of 1.3 billion euros. Right? These are primarily due to the increased interest expenses, but just to give you a little bit of the flavor regarding the amounts that we're dealing with here. And so this is the situation we're at right now. And the objective is to move from a reactive approach to a more proactive one. And we've been tasked to develop internally financial modeling to better forecast and predict the internal expenses, specifically the IT expenses at the ECB, given those budgetary halts and the cloud migration. And of course, by now, I'm sure you understand that it matters in order to quickly react to costs that might incur in a certain year, to be more conscious, to plan better your expenses, so on and so forth. And so I'm here to share a little bit from what I can about the modeling and the approach that we've developed so far. This is also work in progress, very interesting work for us, and happy to share it and happy to hear to have your comments if you have anything later. Also feel free to get in touch with me or Michela after this conversation. So as said before, the primary focus was to utilize advanced analytic techniques, so modeling, forecast modeling, some AI techniques as well, in order to better measure or better predict our expenses throughout the year, the next quarter, the quarter that will come after, so on and so forth. Having that in mind, the scope was to look at the budget for IT, for certain services and certain divisions, look at certain trends and patterns, and then see whether we could say something interesting about that, that is statistically significant, that we could use for future forecasts. Again, utilizing raw data, we've been looking into several methodologies, but finally chose autoregressive models. This might sound a little bit scary, but put simply, these are models that basically finds historical relationships in your data that could say something about the future. If you think about a sine wave that has a certain cyclical behavior, it comes from this world and the world of signal processing. And so you see here on the screen, we've been trying several approaches, of course, before locking in this particular approach. We've been trying some AI models for nonlinear relationships, but also due to limitation of data, eventually we chose this AR. That was chosen because it worked the best. And it also, by the way, is very widely used in economic analysis, in macro analysis. So this is the rationale for the choice. of the modeling. So when it comes to data, here immediately when I heard the first presenter today, both presenters were very interesting, but just to have a little bit of a reference to Duncan there, who mentioned RPA. Also here at the ECB, we leverage any automation tool that we have at our hands to try and scrape the data, to have it streamlined and streamline business processes. This is something that we do, especially when it comes to data preparation and processing and updating the models that we have. But furthermore, of course, you need to massage a little bit the data in order for it to be speaking back to you. And so from actual numbers of expenses, think about outflow of payments going out from the ECB to some IT vendors. Think about, let's say, some sort of bank accounts. We had to take those and aggregate them, let's say, on a weekly basis, on a monthly basis. We had to look at it very carefully and apply some smoothing techniques. For example, sliding averages. So take the average of several months and create one data point out of them. Some well-known techniques in economics. Another technique was to move the data from actual money, actual sums, to percentage change, monthly percentage change, so on and so forth. Again, with having in mind that the main goal is to improve our prediction of expenses. We looked, of course, also into the contracts, the IT contracts that the ECB has with our vendors, the fiscal financial years, the end of years that we have with those vendors. We looked into inflation rates, so on and so forth. And yeah, the outcome was that we were able to fine-tune, and this is always a work in progress, and come up with the best available models in terms of prediction into reality. Other interesting facts were that, models are generally wrong, but some of them are useful. In order to do that, we are trying to reflect the reality that we live at as much as we can. And so we also incorporated some external factors, if you will, which some of them were holidays. So around the holiday seasons, well, I guess we all know that, around Christmas, around Easter, so the week around those holidays, there wouldn't be any payments made, right? And so in order to control for this variance in the data, we had to incorporate some variables into the models. Moreover, we have some data about future foreseeable purchases. Not all of them, of course, are known in advance. We all are working in an uncertain environment to a degree, but what we had, we try to utilize and build upon and incorporate into the model. Now, not making your life too difficult, when you work with modeling and you have to fine-tune it and select the best approach, just to give you a little bit of taste of what it actually means, we had to select the right lag. So I've been mentioning we've been working with autoregressive models. So something about the monthly or quarterly behavior from the past could say something interesting about the future. Question is, what is the right lag, right? We had to test it. We had to also test the forecast accuracy and also control the stationarity. Meaning if you have, you always have error terms and residuals in your modeling, but you have to make sure you have them under control, that they are not changing too much over time, that they have some sort of normal distribution over time. And so you see that modeling reality is not a simple task, starting with utilizing your tools to automate the data collection, cleaning, aggregation, but then also using with some statistical, econometric, if you will, issues. related to model processing. And so here, just one word in advance, the results are, of course, anonymized, wouldn't be able to release actual ECB figures, but just you shouldn't bother too much about the details. Those are obfuscated. And so just to give you a little bit of more enhanced view, you see we were able to collect data starting 2020, in fact, going up until 2024. This is not a very big time series, but also, like in any other institutions, ECB has experienced structural changes. Some new divisions came up, or directorates, if you will, which affects also the costing models and the expenses. And so there's also a certain price to pay if you go more into the past in terms of reliability of the patterns, of those patterns that we're looking at in the data. And so, as I mentioned before, looking into actual data, really the posting dates of payments from bank accounts, aggregating those on a group of payments level, those been taken into divisional levels, expenses, and then aggregated either on a monthly basis or moving average, percentage change, whatever works best, right? And we've been trying those again and again, removing some outliers throughout the data. And the result of that was that we were able to develop statistically significant models with a quite good, let's say, R-squared, meaning the explanatory powers of the models are relatively good. We were able to work with ECB managers in order to first reveal historical patterns and then also discuss their future expenses and already flag in advance whether they need to already ask for more expansion of budgets, or they already have to discuss which type of expenses they might need to cut for this financial year. You see here in the data that also been marking the biggest group of payments throughout the years, and you do see, for example, through this is obfuscated data, but I did keep some of the main trends that are probably out there for other institutions. So coming to the end of a fiscal year, you see a lot of invoices coming in, and you see a lot of payouts going out to vendors. But of course, this is not always the case. This is not always pronounced, and you have other spikes depending on the nature of the IT services that is being provided to the ECB. Right. Just to sum this section up, what we also did, we were able to predict, let's say, a yearly forecast. Say now we're in June, so we collected the actual expenses up until this particular month. We were able to predict and forecast the expenses per division up until the end of the year. Thereafter, we were able to gather those and aggregate and sum those amounts together, and then try to compare those with their budgetary plan. Like other institutions, of course, each and every division has a certain budget plan based on certain budget planning and historical behavior. And then using this, we were able to better calibrate and fine-tune those plans throughout the year, having those, let's say, monthly meeting with the management and with the financial department as well, and better prepare and better manage our financials throughout the year. So just wrapping it up, the key findings here I'm happy to share is that it is possible to predict or say something interesting about future consumption. might not find it surprising. Certain divisions at the ECB might exceed their initial budget allocation, the one that is, well, that has been allocated in the beginning of the year. We also were able to locate certain peaks in consumption, like you saw before. Those happens around June and December, unsurprisingly, but there are more pronounced consumption patterns depending on the division and its function. And those patterns also includes the cloud migration have been initially spoken about, that creates a lot of uncertainty around consumption. By the way, we're also working and utilizing models in order to predict specifically the consumption over cloud, which is a whole different story here. I'm happy to speak about it in person later on with you. And to conclude the presentation, hopefully this enhance and help with more effective budget management techniques and enhance accuracy. We have data volatility, but that's just part of life, and we've been doing whatever we can in order to control for that. We're always open to continuously improving the models, trying new things. On our plate, we will be trying, of course, always more models to come. So more of non-linear models, such as AI models, support vector regression, they're called. We will be trying polynomial models, of course, always having in mind improve accuracy. We always update the models on a periodic basis, and having those discussions with management at least on a monthly basis. They find it very instrumental. And finally, getting back to Michela, I think, perhaps you could say something about the incorporation there with the data analytics.
Yes, so the idea will be also to include this forecasting and new measures from the models in some dashboards or reports. And then, as Tal said, we would like to collaborate more to develop new models and make them more accessible to the different areas and management.
Thanks very much. Thank you very much. I think those slides will be shared. So there's also a little explanation there in the annex, what exactly is AR, autoregressive models, and how are those been created. I do see one question in the chat. Mark, I can immediately.
Yes, please pick it up if you like there. Oh, would you be taking into account programs, projects, economical factors such as policy changes?
Absolutely, Kedan. Thanks very much for the question, and also for the very interesting presentation that you've just had. Indeed, that's a very good question. So the line of budget that we dealt with here in this presentation are IT service budget, right? And so when it comes to projects, we have a completely different line of budget, and that's an excellent question, because those do interact with each other. What we do see, and we check that statistically, if you have those two time series going on together, you do see a negative relationship, meaning you see a certain enhancement to an IT system, you see some money goes into a project there, you will see some months later a reduction in budget in the service for this system. So we do take this into account. Of course, here I just present a more simplistic view of reality, and this is something we look at. When it comes to policy changes, yes, this is something we're also looking at. More specifically, we look into contractual changes, IT, service management, contractual changes, when and if they come and they change the pricing structure. This is something we definitely look at and take into account. Thank you for the question.
I've got a follow on if that's okay, Mark.
Yeah, please do.
Yeah, no, sorry, Tal. It's we'll play a little bit of tennis here. So as I mentioned in my presentation, my background is service management, ITAM, and the whole idea of cost optimization and understanding how can we predict, how can we understand what the business needs from an asset management perspective, especially. Do you find it that the organization needs to have some sort of cost model already pre-agreed, pre-understood? So like a total cost of ownership understanding before you can start predicting what your costs are going to be?
Again, you're bouncing with excellent questions. That I would try to be very brief because we can have an hour on this. We do have total cost of ownership built in our methodology. When we approve project budgets, our management, they always look at it, and we have those responsibilities agreed upon before approving any budget. So we do look at it, we do have it, but there's always also the political aspect of it, right? You're as an IT manager, you're doing great if you have a lot of demand, right? But how to stop that, or how to control for it? No, you're doing great if you're consuming all your budget and you're always asking for more. I mean, I haven't mentioned it explicitly, but you have those spikes towards the end of the year due to fiscal year, but also due to the fact that budget might still be available, for management, and so they want to use it. So there is a delicate balance there, and you would need to, from my experience, to set some terms with more senior management to say, for example, approve only, or you will have to have a very senior management approval for a request coming up after November or something like that, right? So you do need to work up your governance when it comes to IT expenses, services, and projects. And I think we're trying to do our best at the ECB, like any other institution, within the boundaries of and limitations that we all know. Right. So I hope this, in a nutshell, a little bit gives some useful information. Thanks for the
Brilliant.
question.
Thanks, Tal. There's just one more question there I see from Saba. What are the advantages of building your own models over using off-the-shelf forecasting and budgeting tools? Or maybe you should say, when would you use one and when would you use the other?
Absolutely. Very valid question. So even to pick on this, in SAP, right? We all are using SAP or similar systems. In financial modules, excuse me, you do have nowadays some tools for prediction. The problem with that is that this is a black box to a very large degree. I found it very difficult to control and fine-tune the parameters over there. And also having in mind that if you need to collect financial data from different systems, it is simply more convenient to work, let's say, in a certain cloud or data lake, right, server, where you can massage all those sources together, merge them together to your likings. Having said that, of course, we are using statistical and modeling packages, right? Personally, I could say I'm using Python and I'm using packages from Python. I didn't wrote the algorithms themselves of the model. So I would actually say that we are using off-the-shelf existing models and well-known techniques in finance for forecasting. We're not here to invent the wheel, not at all. But just there is a certain gap there that we have to fill in order to fine-tune and tailor the existing infrastructure and data to our needs. So I hope this more or less answers the question. And thanks, that's a very good one.
Thank you, Tal, and thank you once again, both of you, for a really fascinating and insightful session there.